Welcome, 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 guys. Hey, this is Trevor Bill, and I own and operate the Bill organization where we protect families, we create access to tax-free cash, and we set up retirement for small business owners, entrepreneurs, and that the smaller guy that's trying to scale. And we make sure you guys doing things the right way. Hey, so I'm coming back to you with another episode, and I got a great guest with us today. I was excited about this one. I couldn't wait to pick his brain on some good stuff, and I think you guys will also too. We have with us the owner and operator of HGO Capital. He resides in Los Angeles, California. HGOcapital.com. Hugo Aquino. What's up, man? How you doing?
Doing great, Trevor. Doing great, man. It's a beautiful Sunday today, so happy to be here and just conversate with you, you know. How are you?
Man, I was excited about this, man, because there's so much that we could do, like with your knowledge and how to get to funding. There's so many people that wants to start businesses and they don't know how to get started. And I think you are a great starting point, right? to
Yes.
where you can go, how you can get stuff behind some funds behind you. So I'm really excited about this one, right? So
Definitely, definitely. And then this is something too, I love this topic that we're going to get into because for myself, when I first started going into business, it's a lot of the traditional thinking of being able to start your business with either getting multiple jobs, saving up all this money to even start, or even going and asking for loans coming from friends and family a lot of the times when we're first starting off, right?
right,
So getting into this topic and just what I've learned over the past, over years now has just helped me to see different approaches towards building your business, more efficiency, just leveraging other things that are around us, resources, instead of the traditional way of thinking about it. So
right.
excited to talk about
No, no, hey, don't give it all to them at once. We
that.
let, we got to slow roll it into that. But tell us a little bit about you. Like, what born and raised in L.A., California, and where you just come out of your mom's womb knowing about funding. How did this all happen? What did this come all about?
So I come from both two immigrant parents here in LA, grew up in a small community named Boyle Heights.
Okay.
So in Los Angeles, California. Grew up here my whole life. I mean, did the whole route of going to school, getting a good education. I went to Cal State LA here in LA, studied criminal justice and business management. So
Wow.
the initial route was going into law enforcement. That was the overall route that I really enjoyed learning about, going into it, just saw myself in the future. However, things started to change once I actually got into college, started meeting a lot of local law enforcement officers, and really started seeing their lifestyle, their way of living. I respect what they do. They do a lot of things for our communities, right?
Mhm.
However, one of the things that kind of held me back was just the time factor. The time of always having to work or dedicate my time elsewhere, as opposed to dedicating time more for my adventures, my family. And that's where business started clicking in a little bit more. And I got curious about what type of businesses are out there. And I even joined a network marketing company, a business to start off. It was a low costing, gained a lot of people skills, gained a lot of business knowledge, entrepreneurship. And I always loved numbers as well. Having to
Mhm.
go during that time, I didn't want to go into anything accounting, didn't want to go into any other kind of financial planning, none of that stuff. I wanted to just learn more about money, how that works, how you can leverage it, and all that kind of stuff. But I didn't know what at that time.
Right.
However, the entrepreneurship mindset through network marketing just helped me continue building out my mind over time. Where at some point, like towards the end of my college career, my college years, I looked into social media funding. I just searched up funding, credit
Yeah.
card stacking came up, loan stacking, so many different verbiages came out. And I started seeing youth, like young entrepreneurs with like stacks of credit cards. And I would just be like, what are they doing with so many credit cards? Growing up, it's like, don't have too many credit cards, don't get in debt, don't, don't abuse these credit cards because they're going to come and get you. It's always best to pay everything for cash. But I looked at these young entrepreneurs that were like 20, 21, and were making businesses, investments, leveraging
Right.
credit. And that's where the curiosity came in play about credit, where I actually saw a Tesla at that time. I remember it was right before COVID. I saw a Tesla. At that time, where it was big, Teslas. Now they're
Yeah.
everywhere. But it had said King Credit. It said, an Instagram handle. I looked it up. I said, you know what? I'm gonna invest 1,000 into going into learning what he does and all that kind of stuff about credit. That's where I started opening my mind more. From there, I was like, oh snap, there's a lot to this than just a credit card to swipe. There's
Right.
more that you can leverage it. And that's where I really just started investing more into my education about credit, leveraging into, started using some of my credit to invest into mentorships. And just from there, I've spent over like 40,000 in just mentorships alone, just learning and diving into how to leverage our resources that are around here to scale your business a lot more efficiently and effectively.
Man, that's awesome. That's really awesome. I mean, just on that point, that kind of leads me right into my first question. What you kind of went into that area, because you seen something off Instagram or social media and went into that and just got all your knowledge up. What if you're a startup business, what's the best funding to do? Like, what route should that person take, as a startup? Because you can't just go to Chase and Wells Fargo without a long financial history. So what's your just suggestion for a startup?
Well, this is where credit came in place, right? When I started learning about it a lot more, I had a great personal credit already built. And when I first started my first company, I traditionally, like I said, I thought about just using my own money, which I did at that time a little bit. I used some of my funds, but learning into the credit game, what you can do is you can go and apply for a business credit card as a startup. As a startup, you can go and leverage your personal credit because they actually do a personal guarantee kind of thing when they apply. So they will check how your credit is established, what kind of accounts you have, what kind of limits you have on your credit side, and overall history. All that helped me to get my first card was like a 16,000 credit card, business credit card with 0% interest for 12 months. That
Mm,
money, I leveraged it to invest it into the company, my first company, and then that helped me make more money, which
right.
I paid off my credit card, asked for a credit limit increase, got more money. Boom. I started leveraging capital that was from the banks, not even from my personal money. It was literally because I had good credit, personal credit. That
Yeah.
was an easy way as a startup, an easy way for me to just access capital, business credit cards. Some banks do offer with little to no relationship needed to go and apply for a business credit card. Some banks do require a little bit more relationship. And what I mean by that is being able to have like a business checking account with them, a business savings account with them, being able to
Ooh.
move some funds around there in order for you to even apply and get a good limit on that business credit card. That'll be your first one. So,
Well, touch on that real quick. Is that as far as that relationship? Who do you suggest? Give us some tips. Give us some gems out there. Who do you suggest like you should go to? Should I go to if I'm a startup company? Do everything you just said. Should I go to the Wells Fargo to or go to the Chase or where? What should give me some
all
gems?
right, all right. So the big bank right now, what's one of the top tier one banks and it's overtaking the financial industry is Chase. Chase is giving it out, man. They are happily assisting startups, happily assisting people that have already been in business for years. And recently we got one of our clients that just started up his own business, barbershop business, got him set up properly. Now, getting set up properly is also important in terms of your business. You can't be a high risk business. High
Right.
risk businesses do not do well with banks. If you go into a low risk industry or even know how to properly structure it where it's low risk to the banks, they will be open more to also working with you. So we helped this client get set up properly. We helped them open up a business checking account where they deposited some money, built some relationship for about a week or two. We applied for a business credit card and they got a 50K 0% interest for 12 months. So
Okay.
it's structuring relationship And then overall personal credit, of course, it has to look good, and then going for that application. So all these little factors help. But if I were to, if I were to recommend, Chase would be the first one because they only require little to no relationship on that end.
Okay, okay, I'm writing that down, Chase. Okay, but let me ask you this: what's your thoughts on credit unions?
Oh, they're amazing. Some credit unions are amazing because some of them do offer business products, some of them don't. There are
Mm,
different credit unions out there. I mean, there's some specifically only tailored, for example, like to the education field, to medical field, and that's all on the personal side, right? And they're great whether you want to use them as well for personal loans, maybe great offers on credit cards. They're a lot more lenient. They're willing to give a lot more money to their clients, to their people in
mm,
their network because it's not for everyone. Credit unions are not for profit compared to banks, right? Banks are a lot of times are having all these different products pushing them because it is for profit. There's a lot more money going into them. That's why they're bigger than credit unions. But
right.
credit unions are amazing overall. If you can get into a credit union, whether it's through a family member, maybe they're in the education field, and then your sibling, your spouse, you can also get into that and receive all the perks that they offer. Someone in the armed forces, if you're living with them, or if you have someone in the family tree, you can also get into like Navy Federal. They're amazing, one of the best credit unions out there. And there's so many more out there that you can join. You can join organizations, and being part of that organization allows you to enter into certain credit unions too. So there's just so many
Man,
ways to get into that.
man, I hope you guys got your pens and pencils and papers because he's giving gems, gems. Okay, let's go into my next question. Your startup business, you have bad credit, right? So what's some of the steps to improve my credit to get that business credit? Because I'm like you said, it's most of the time you're going to start with a personal guarantee with your personal, right? So you're going to start on that side. So what's some tips you can give as far as like how to start getting that personal credit to get into the business credit to get that funding?
Yeah, off the bat, if you already know that you have bad credit, or if you know you're struggling a little bit with your credit, I would say reaching out to a credit specialist that can audit your report, give you more insight as to, what you can do. For example, some of the things that I can discuss and talk about that's common is usage on credit cards. When someone ends up using too much of their credit card and that's reporting on their credit report, if it's over 30%, they start being a lot more riskier to other financial institutions where they don't want to lend out money to them, or they will lend out, but very little amounts they'll receive in approvals. So being able to tackle that usage on the credit cards is one way that by financing, managing, where your finances are going, just tackling it so that way it can lower, right? That's one way
Mhm.
to improve your credit because with utilization, with usage, that makes up about 30% of your overall score. And then
Right.
you have on-time payments. Sometimes, we understand life gets in the way, and we always recommend put your credit cards on auto pay. The reason is because once you put them right, you don't have to worry about making a payment. It'll automatically make a minimum payment. Of course, it's ideal to make higher payments if you have high usage balance reporting, but these auto setup payments, they will help you so you don't have a late payment ever showing up. Late payments, if you have one, those will have such a major effect that within the 2 year span, if you're even thinking about going and applying, getting a mortgage loan, they won't accept you because you have that late payment. It has such a big weight on it. Even with credit cards, loans, if banks see that you've been late, they don't favor you at all. They actually are scared because they know that you've had some financial issues, and if you have high usage, late payment, one, two, or three in different places, it's just multiple red flags. So in that sense, a best way to go ahead and prevent that from happening is set up auto pay. Easy
Right.
thing, right? And payment history make up about 35% of your score. So just with those two alone, you're looking at about 65% of your overall credit score. So it's
Right.
super important. Aside from that, let's say someone does have, happen to go and start maxing out their credit cards, life happened, they can't pay that credit card anymore, and it goes into collections, for instance. Collections, it's basically like a third party company agency buying off a debt from the original creditor, meaning the original bank that you had a relationship with. So it can be Chase, for example. You go with Chase, um, you don't you can't pay it. It goes in, they close your account, they sell it to a collection agency. Chase gets to write that off on their taxes, right? It helps them out, but you also ruin your relationship there. A way to help you remove a collection from your report is you can actually fight these collection agencies because there has been no agreement, there has been no documents, contracts, or anything between the consumer and this collection agency. Collection agencies just reach out to clients and they sometimes, abuse their power in that sense because they're saying like, oh, you owe this amount of debt from this product, but they're not identifying themselves sometimes. And with that said, there's no contract. You don't have to answer to them. You don't have to you don't have to respond to them in any manner because there is nothing to prove that you got an original credit line or credit card loan from them. There is nothing there. Collections
Right.
agencies are just third parties trying to collect money to make money on their end. So you can fight them. And that's one of the things there that, we help with credit repair on that end. What else? And also there's inquiries. Inquiries too. If someone has bad credit because maybe they're applying to too many products,
Mhm.
one of the things that we can do is also assist in removing certain inquiries that do not attach to an open account. Sometimes these inquiries, they fall off too. After 6 months, they don't have major impact. So that's one good thing to know. But it's important to not apply more than 3 times within a span of 6 months. Because if it shows up more than 3 inquiries, banks already start seeing that you are probably desperate for certain financial products or you're in a place where you might start going downhill and it just triggers certain things in their system where they don't like that you're applying to too many things.
So,
So
so if I heard you correctly, an inquiry, if it's not open, so if you apply for a credit card and you get denied from it, and they still put the inquiry, you can fight that.
we can have, yes, we do have certain strategies that we can assist in removing an inquiry that is not attached to an open account. So we can dive into that a little bit more on a personal level, right, with our clients. But yes, we can assist in that area and there can be that removal, which can help. It helps our clients. It helps our
Right.
clients raise their credit score back up. And we also, of course, educate them on the inquiry side. If you get denied for, normally my rule of thumb, what I tell people is if you get denied on 2 applications already back to back, stop, immediately stop, because there is something wrong with your credit that is not allowing you to get an approval. So we have to go into it, we have to audit the report and see what's happening here. Why is
Mhm.
it that you're getting denials? Because when someone starts abusing, right, and just starts applying, they're only going to hurt their credit more and more. Imagine having 10, 12, 15 inquiries already. That's just multiple points dropped already on your credit report.
Do you know now they're coming out with yeah, no impact to your credit. You can check and see if you can qualify. No, is that should you trust that?
Yes, yes. This is actually good that some of these banks are offering pre-approval tools, pre-qualification tools. Like, for example, you could go with Chase. Wells Fargo has one. And we normally do this when we're helping our clients or overall people help build out their credit, strengthen their credit profile. We love leveraging these tools because they can give us a little bit of an insight towards what route is it going to go. If you submit a pre-approval application and you get multiple card offers, that's normally a green light that you will get approved for a credit card. But if you submit it and nothing shows up, they say, sorry, we can't offer you any products right now. That might be a little concerning where we have to go back into the credit and see what might be causing that you're not getting any credit card offers. And this is great because that's not a hard inquiry. Submitting a
Good.
pre-approval is not a hard inquiry. It's actually a soft pull. So they would just check some basic details on your credit, but it won't overall check your whole entire credit report. So we love those soft pull products. They won't impact our credit.
Yeah, no, that's good. That's good, man. Dropping gems, gems. Hey, so if I mean, kind of what I'm just hearing, and we're just getting started, is like just having there's hope, right? Like you can have bad credit. A lot of people are just like, it is what it is, right? And but there's hope. There's ways to fight. There's ways to get your credit back. Would you tell like the average consumer, like, hey, look, I don't care what your credit looks like. There's a way out of it, right? Is that would you say that? Is that a fair
Correct.
statement?
Yes, and I get that a lot too, where sometimes people lose hope because their
Mm,
credit goes down for whatever the case may be. You know, they went through things, it went down, but there's always hope. It's just a matter of knowing what to do,
right.
reaching out to someone that knows that can assist you in building out a game plan. Now, some people's game plan might be 6 months that we can help, that they can get help and repair their credit. Some clients might be 12 months, some clients might be 2 years. And something we emphasize is that, with credit repair, credit building back up, especially when you took a hard hit, it takes time. It takes time to report. It takes time to just build that relationship again with banks. So you
Yeah.
can't rush those kind of things because those are valuable relationships, and it does take time. But yes, there is hope, and there's also other strategies to acquire capital for your business. It isn't just the personal credit side, leveraging that for business credit cards. That's probably the best route for a lot of startups that, we also get. They love leveraging 0% interest business credit cards because of that reason. But that's not the only route as well. There's also other routes people can take. If they've been in business for 2, 3, 4 months, there's other funding that they can get for themselves as well.
Yeah, that's why we got you on here, man. That's that's why you here. We got to go talk to Hugo, man.
Yes.
So going into my next question, talk to us about the difference between a unsecured loan or a secured loan, or even an unsecured credit card and secured credit card. What do they mean by that?
Yeah, so unsecured is basically money that's being lent out to you, and banks are trusting you that you're going to repay it back over the term that you agree. So, a lot of the times when your credit is already built out, or you already have previous loans, previous credit cards that are unsecured with them, and you've paid it, they're going to keep giving you more offers, bigger offers for money that is not collateral based. It's basically them just trusting you. You're going to repay it back, like I mentioned. So that's an unsecured loan, unsecured credit card. When you're talking about secured now, these are products mainly for people who are just either rebuilding their credit or people who are just starting to build a credit profile. So with them, it's good to go ahead and get maybe some credit cards, some loans that are secured, that they leverage their own personal money as collateral. They give it to the banks. The banks will then give them a credit card with the same limit that they give them, or they'll give them a personal loan that's the same amount that they gave to the bank. So it could be a 10K loan, but they
Yeah,
give their own money 10K, right? And then bank gives them their money 10K, and they hold that as collateral. So that's a secured loan, secured credit card. And those are great products because when you already commit to something like that and you are in good standing, good payment history, you meet the terms, they will offer you unsecured loans, unsecured credit cards within a matter of 6, 12 months. It's just a matter of continue to make those on-time payments.
that's a way to, like you talked about earlier, to start that relationship with
Correct.
them. So could you get a secure credit card anyway? Is it hard to get? Like who or can loans, or even starting off with credit cards, can you go to Chase or Wells Fargo and get a secured? Can you go anywhere and get a secured?
Some banks do offer secured credit cards, secured loans, so it's just a matter of going and asking what they have. But yes, you can definitely just go in branch, ask them like, "Hey, I want to take out a secured loan. I want to give 10K, get 10K from you guys." And yeah, they're definitely open to assisting you. In fact, they're a lot more helpful to that because they know that you want to build relationships with them. So it's an
Right.
easy, smooth process, and they welcome everyone that wants to open up something that's secured.
Right, right. Now see, now when you really want to get your strategy and game plan together, you get an IUL that a IUL product with me, and you can pull your own money out, put it into a secured, and then talk to Hugo and say, hey, how can I put something in a secured and get some more funding in it and turn that money into more money and more money. So it's just about the knowledge of having
Of
the knowledge.
course,
So
of course.
that's awesome. That's awesome. So back in the day, like I know like when my dad was like he had a construction business. To get a loan, you had to do a business plan and all of that. Is that still the thing now, doing business plans or and how vital is that? Like, do you have to have a business plan to get funding to secure funding? And if yes, because a lot of things you just talked about was just didn't sound like you needed a business plan, right? But what I guess is it for bigger type money? What do you need the business plan in? And is it still the same like it used to be?
Yeah, with business plans, those matter a lot too. Like if someone is looking for more like higher limits of funding when it comes to maybe you're talking about 500,000, 400,000, like high numbers now, yes, they will, banks, these financial institutions will ask for like a business plan to see where's your marketing gonna go, what's your market analysis, company description, what do you do, how do you manage the company day-to-day operations. So there's a lot of detailed things that they really go into feeling on their end a little bit more secured. All right, this is a well thought out plan, a well thought out business. We think that we agree that they should get 250,000, 400,000 because they have strategized every single thing and compared to even how it is doing in the market. So you really have to be a lot very detailed when it comes to business plans. And that's, that can take time, that can take a lot of research, but that definitely does help when someone does have that. In addition to that, some of these banks will also check your personal credit too. You might not need to have a high personal credit, but having like in the 600 or so, they're okay with it. If it's not top tier, they're okay with it as long as you have a business plan in place as well. And then you're legitimize yourself as an actual company and so forth. So there's a lot of things that do go in the process that does help. And I've seen it myself. I mean, people have gotten high approvals, but it's just a matter of coming up with that plan. Now, also, there's other products out there as well that love business plans, but they also like to see financial statements as well to
Mm.
see how has the company, it's a startup, but how have they been doing for the past 3, 4, 6 months? Let's look at their revenue. They have a good business plan. Let's look at their revenue. Is it showing positive growth? Is it showing, good ending balance after every month? Sometimes they'll even ask for tax returns too. So all these things go together that just solidify for you to acquire higher amount of capital.
Right. Yeah. So bigger amounts business plan. What are there certain things that you have to have on that business plan?
Yes, so basically it would be a description of your company. That's some of the basic fundamental things that you would need is description of your company, market analysis, pretty much market trends, things that are happening within that industry, how you're organizing your business, how you're
Mhm.
managing day-to-day operations, or how you plan on managing day-to-day operations with also using the money that you're asking for. What are you going to be investing it into? What have you seen the return of investment in this with other businesses? So just some of the things, what kind of products and services are you going to be offering? So these are some of like the basic things that you will have to dive into in your business plan. And there's a lot more to and a lot more things we can also assist with when it comes to meeting with someone and just overall what industry are you going to go into and just helping them structure that way.
Yeah. No, that's awesome. That's awesome. It's good stuff. Um, you see a lot of people. I mean, funding is a business, right? Getting credit cards is a business. It's always been a business. So you'll get a lot of stuff come to your house. There's different. How do you identify who's like the reputable people you should be working with? Like, or like some of these companies, you're like, man, I've never even heard of that. I didn't even know that was a bank or they had a credit card. Like, what are some ways to kind of like you know get get put the scammers over here and like, okay, this is a reputable company. I could, do business with them.
Yeah, I mean, right away, whatever bank we have in our community, those are off the bat reputable, right? Because they already have a name to themselves. They might be sending you offers, whether it's mail, whether it's email, different ways, right? They're approaching you. Sometimes we do get, like, even myself in the mail of different banks that I've never even heard about myself, but it's just because they're smaller banks. That's what it is. A lot of the times they're very small. They offer certain products, maybe better interest rate. But one suggestion that I would give is do your research when you are receiving notifications, emails, mail from small lenders, or they're identifying themselves as so and so lender. Go ahead and look them up. Go ahead and look them
Yeah.
up. Look at their website, look at their products, look at people that have talked about working with them, because there are also lenders out there that, yes, they're established, they're a little bit smaller, they're established, but they don't have the best customer service. They don't have the best rates. They don't have the best this. And when it comes to mailing out offers to clients, they show something different. They show like, oh, you can qualify up to this amount, up to this interest rate. But then when it comes down to the application, there's really no guidance, no assistance to really get you there. And the whole goal is to just get clients to apply, to apply, to apply. And that always can affect clients overall because they can be stuck in a place where they get a loan with super high interest rate that's not going to help them out. And they have no one to reach out to with these lenders because their customer service is not the best. So
Mhm.
it's always good to go with lenders, with banks that have great customer service, have great overall products, and can be transparent on their end, what they offer and what they can offer you.
No, that's awesome. That's good. That's good to know. I mean, because you can get bombarded with just mail and email.
Yeah.
Like you think, like, man, I've never even heard of these guys, and like and it gets tempting.
Yeah.
It gets
Yep.
tempting. They say, "Oh, no credit, no, what is it, the soft pull?" Where you
Southpaw. Yeah.
say,
Yeah.
no damage to your credit. You will take a look for you. So yeah, the marketing is fantastic.
Yeah. Or even something this too that I've seen with when some banks they'll send you an offer and they'll be like, hey, you can qualify up to 40,000, but you need to open up a business checking you need to open a sorry, a personal checking account or something. So some banks will will create like a hard inquiry on your credit if you open up a checking account with them. They'll check you out and then it can result as a hard inquiry. And addition to that, if you apply for some of their products, that's an additional hard inquiry. So it's
Ooh.
good to do your research, like I mentioned, going back to that, do your research on these smaller banks that are offering you products. Look at the fine print, see if it's going to be a hard inquiry. Or one of the easiest and fastest ways is pick up the phone, call someone, right? Call the bank, call whoever's sending you that and be like, hey, I'm interested in opening a checking account with you guys and applying. What is there a hard inquiry for both? Is it a hard inquiry just for the loan? What is it? Get informed.
Good.
That's the fastest way.
No, that's good. I didn't know they could do that with a open up in a checking account. That's just
So yeah, that happened to one of my clients. He went with a credit union and they ran his credit in order for him to actually open up a checking account with them.
mm,
Yeah.
wow. Yeah, I get it's knowledge, people. You gotta get knowledge. You gotta get knowledge.
Yes.
So uh you got a new business, they just started up, they get business credit cards. What's the, you know, I mean, because growing up, going to school, everybody tells you don't use your credit cards except for emergency.
Except for emergencies. Yep. Yep.
So now you're coming in telling us you can leverage your credit to start your own businesses. What are some of the risks and what are some of the benefits of doing that, like financing your business on credit?
Yeah, so when it comes to risks, it's not having a plan. You
Mm,
using the capital, the money that you get, and just trying to figure it out as you go. You have to have, it's best to always have a plan in place, what kind of industry you want to go into. You've already looked into certain people, maybe you want to reach out, leverage the credit to pay for their education classes, right? There's already been a plan in place in your mind that you're able to leverage the capital and avoid having to risk, right, losing all that money. Because I have seen instances where people don't have a business plan or don't have just don't know how to go about it, and they're just swiping here and there because they're hearing different gurus everywhere to get this, get that, get this, and this is going to help you, but then they just have no guidance. They're just listening to what maybe is a minimal cost in different areas, but all that will accumulate and will overall give you a high debt. And if you don't know how to make, if you don't have guidance, proper guidance, or you don't have a plan in place, that can lead to you having to pay super high interest on that debt, you having to maybe go bankrupt, right? Whatever case may be. But to avoid that, you must have a business plan in place, must have a direction of where you will put that capital. Without
Yeah.
direction, you create that risk of, dealing those financial issues.
Yeah.
Yeah.
Yeah. And then as far as benefits.
Oh, benefits, you're building business credit. When you have your business already operating, that's all set up, legitimized, you open up business checking accounts, you're opening up your business credit cards, you get approvals, you're using it, right? You're leveraging that business capital and you're paying it back. That's going to get reported, which is going to get reported to your business credit, which overall is going to help show reliability as a client, as a business owner. And over time, as you're making these payments, you're paying it off, you're making your minimum payments, all that, other banks, other financial institutions will also see that, right? They'll see that you're a reliable client with other banks. They will offer you products as well. So the benefits is that you start building your business credit by paying things on time, paying it off completely. All these things help building your business credit, and that's one of the beneficial factors of it. Same thing with if you are building, let's just say Chase, for instance, you're building business, you have a business credit card with them, you're using it, you're paying it back and forth. They're gonna start pushing more products for you. They're gonna start telling you like, hey, you can apply to this. Hey, you have a special offer. Why? Because it's relationship you're building as well with these
Right.
financial institutions. So it really is a lot of benefits to it. Relationship is a key word there. Relationship with
Yeah.
different
Yeah.
products.
No, that's awesome. Yeah, that's really good stuff. Um, should so we talked about earlier about the personal guarantee with your getting funding or
Yes.
credit cards. Um, should you be should you still separate that, like you have a business, should you still separate the personal credit or your like some of your personal credit cards and your business credit cards at that time, or should you just be like, hey, I just gotta wait till I can get approved for a business credit card, or could I use that personal credit card to help me get started? What do you say about that?
Yeah, so I always say it's best to keep things separate. And the good thing about going into business and applying for these business credit cards is that nothing on the business side will report to your personal. So it is separated off the bat. So if you, let's say you have a 16,000, in my case, 60,000 business credit card, let's say you maxed it out for the first 2 months, you're like putting all these spends to start your business, right? These costs, that 16,000 usage is not going to report to your personal. Your personal stays untouched. This is the reason why we always like to tell clients whenever you're going in business, make sure you separate yourself by creating your LLC, right? Your structure, going and applying for business products because that's going to keep away from your personal, from using your own personal credit cards, using your own personal loans, all these different things to help your business. There's already business products that can help you. But overall, it's like I mentioned, it's important that you keep it separate. Uh, because if you ever think about applying for a mortgage, think about applying for a car loan, think about applying for a personal loan or other credit cards with great offers. If you're using your personal stuff and you're maxing it out, you're not going to get approved for it, right? But if you're
Right.
keeping it separate, if you're just using business products, your personal profile stays clean. You can still go apply for a a mortgage, you can still go apply for a car loan, you can still apply for a personal loan. And I say this from personal experience too, because that's how I've been able to maintain my personal credit over 800, just keeping it clean, right? Clean. And then just my business is all business expenses, all separated.
Right. No, that's good. No, I think that's key. Just to be able to keep the. I mean, we talk about taxes and business. Keep it separate.
Separate.
Keep it
Keep it
separate. It's in everything. Keep it separate, right?
separate. Yes, sir.
So let's go into rebuilding. Like it is what it is. You got to rebuild.
Yeah.
Walk us through some steps on like, hey, how do you start this? Like, how do you start the rebuild so you can get some type of financial comeback?
So rebuild in the sense of just rebuilding your credit, rebuilding relationships.
Rebuilding your business credit, like rebuilding it. Hey, let's say your personal credit took a big hit, and you got this business idea, and you basically got to start rebuilding, from scratch. Like, just a couple steps. Like, okay, start here. This is where we're gonna go with it.
Yeah. So if, for instance, a client gets or a business owner gets to a point where they use the capital that was given to them, for their businesses, but then they came to a financial hardship. Something happened where maybe they just can't pay it back, right? It's important to also call the banks that you have a relationship with, explain to them a little bit about the situation too. They might be open to maybe giving you 0% interest. They might be open to just lowering down the interest or building a payment plan with you, because in the end, these banks, they want their money back. So they're open to also hearing you out. They're also open to working with you a little bit more for you to pay back what you used, what you borrowed, right? So having that communication is important. Aside from that too, being able to show them that as you're coming back up, you have money coming into the accounts. You're being positive, right? There's more ending balance, right? Showing on your checking accounts, right? That's relationship, as opposed to um negative amount, like being able to have, right? What's that word I'm getting? Not withdrawals, it's overdrafts, not having
Uh-huh.
overdrafts in your account. So those are some of the small steps that you can already start doing, um, that I would suggest off the bat. But I don't know if you had like a specific situation, specific.
No, I just like, okay, like something tactical, something people can just say, you know what, the first thing I'm gonna do, I know I got to rebuild my credit. First thing I do, you talked about the 35% is not late payments, or 30%, is getting that usage down. Is there something that I don't want you to give your whole playbook away for your clients. You guys got to pay for that, right? But like something tactical to say, okay, this is what I should do to start rebuilding. Like, even just give us one thing, like, okay, how do I get my usage rate down? How do I get that percentage down?
So we're very strategic because if we go back to just where we talked about separating, right? Your business and your personal. Let's say your business is experiencing where you aren't able to pay back X amount, right? But your personal side, you have top tier one credit because you've been working with us. We've been helping you overall, just strengthen your credit profile. While your personal being untouched, there's a strategic way we can go about it to get you some capital on your personal side to help you pay your business if needed. It's just a strategic here, right? Plan that we can do. We leverage our personal, maybe could get a loan. We pay down the credit card that we were using. Maybe it has like 20K balance. Now we paid it all off. We can go for another business product with them. They're going to see that you already paid it all off. We can go for another 0% card, higher limit this time because they've already seen that you've never been late on payments, you no more balance, and that can help you get back at the 0% interest rate for 12, 18 months on their business credit cards, and you can just rebuild with that. You can just leverage that capital again. Some of these banks too, you can also transfer limits. So That's a big one too. You can transfer limits. You can get you let's say you had a 15K approval before, you get another one that's 30K. Hey, you want 45K at 0%? Let's transfer over some limit. Let's get you that 45K up there. Now you have 45K of 0%. So that's just a little bit there.
Ooh.
There's a little bit more that goes into it, but that's just more of the overview of what you can do. It's all strategic.
No, I like that. I like that. You can transfer in the limits to back and forth, right? Like,
Yes.
can you do that? Like, um, let's just say you wanted to go buy something. You needed to go buy something for your business, an investment, right? But you have that 20K that you was talking about, but you have this 25K personal card that's zero. You haven't used it. Could you transfer that 20K, shows zero balance on the business side, right? And then now you can go do that investment because they say, oh, you got it's clean. And then, like, let's say you go get another card, like you was talking about, go get another card, leverage another card. Then you could put it back.
So you wouldn't be able to do that specifically, but the ideal route would be helping you get a personal loan. That would be the ideal route. The
Okay,
loan
got you.
part, yeah, the loan part that can take care of that. But if transferring and all that transferring can work out from personal to business and all that, that would be amazing, even myself too. But yeah, that's not something just quite there yet. I mean, we don't know the future of what it holds on that being able to transfer, but you can transfer even on the business side, they might offer a balance transfers too, where you can apply for a business credit card that has 0%. You transfer over a balance to that has 0%, and you just aggressively pay it down. And then
Yeah,
there, you start working your way up towards not only building relationship, but overall clearing your debt on the business
yeah.
side. So all that helps.
Man, it's good stuff. This is good
Hmm.
stuff. I love it.
Yeah.
And then you're speaking of debt, like, is there like I mean, how do you this is my last question. Actually, yeah, I do have a couple more I want to go deeper on, but I want to get this one out. But how do you balance taking on debt while maintaining cash flow in your business? Like, basically, like, okay, I need to take on debt, and like I said before, we've always been taught debt is bad, debt is bad, debt is bad. Taking on, explain to us like what's good debt to take
Mm.
on to help us with that cash flow.
Mm. And I like that because you use good debt. So there's good debt and bad debt. Good debt, of course, and I use this is anything that's going to help bring back a return of investment into your
Mm,
business, whether it be a marketing strategy, whether it be you going and purchasing something that can provide more efficiency and service. There's different things. Of course, it's always important to first look at what you're going to invest into. That's going to be the good debt and see that other companies, other people have made a return of investment as well. Follow that as a blueprint for yourself so that way you know that this is going to be good debt because you're going to make your money back plus more.
right,
Bad debt comes where you just start spending on things that you think is going to be a good idea, but that there has not been enough of businesses or enough of like proven that it will return your money back. You're just spending just out of nowhere without any thought into it, and it's not going to help your business. What doesn't
right,
help your business will not make you any money, right? So that's why these investments, these good debt investments, have to be strategic as well. Marketing is one of the biggest ones off the bat that I can just say because I mean, there's so much marketing going on, right? But how you're marketing, that's the important question. So before
right,
you invest into marketing, do some research, collaborate with some people, get their feedback on who they've gone with, right? There's these steps that we always encourage people to do before investing into something. So
right.
do your own research. So there's good dev and bad dev.
Yeah, no, that's awesome. So this is a question that I meant to ask you earlier because I had to write it down. You was talking about risk, and you was talking about like the industry. Give give some people the industry. There's risky industries, and then
Mm.
that the banks look at. What are some of those risky industries? Like, so if I'm like, oh, I want to do this tomorrow, and you're like, well, that's gonna be hard to get funding. Just off that's off the bat, that's risky, right? The banks look at it as risky.
Course. Yeah, off the bat, a way to see it or think about it in your mind is, if I start building this business, is this something that I will get paid back immediately, or is this something that I have to do a job for 3, 4 months and then see a return, see a payment happening from there? So, one industry I could say is construction, right? Construction, you
Mm,
get paid like maybe a small deposit in the beginning, but you don't get paid the full amount till you finish that job, which
right,
can be weeks. And we don't know what can happen in those weeks. I've seen cases where some of my clients too, or some other people and other clients, other people's, and they don't get paid because the person ended up going through something and now they have to pay out of their own pockets, the company, to their workers. So that
yeah,
off the bat becomes risky as an industry, construction, right? Um, Real estate as well, right? Being going into that, investing money, you won't see your return of investment until a few months down the line. So
right,
that in itself is also risky, um, as well. Investing, the word investing in your business name, no, automatically no, because that in itself too requires a lot of capital. And they know that when it comes to investing, it could be multiple things that can change overnight. You invest in crypto, you invest in something, right? Um, who knows? Maybe in a week from now, you can lose it all. Maybe you can make more. It's a risky field. It's a risky business where, as opposed to service, service businesses, a haircut, I get paid after the haircut. It's a service I'm providing. A
right,
consultation, I'm going to get charged by consulting. It's low overhead. It's a service I'm providing, and I get paid right there. So
right.
businesses that require higher overhead, risky. Businesses that require lower overhead, beneficial, more appealing to banks. And we can touch base a little bit more on that too for whoever is interested, and strategically help them to where they are seeing low risk, but they can still conduct their business. It's all about strategizing, it's all about structuring properly. And those are the things that we talk about when we do our one-on-ones special planning for our clients.
Awesome, awesome. So just to clarify, so if you have a service-based business, that's considered non-risky. That's
Correct.
right because they're going to. So I wanted to preface that because your plumbers, your electricians, your auto glass guys, they get paid immediately, right? So that's kind of what you're talking about. Like, it may not be the sexy title, but they get paid upfront, immediate, like, right? So
Right.
those type of businesses are, well, from what you're telling us, is, hey, a bank is going to say, okay, yeah, how many jobs are you doing in a day? Oh, I'm doing 10 jobs. Oh, you're getting paid 10 times a day, then, right? So, right, I
Correct.
know you're
Yeah.
getting paid, right?
Correct. Yeah. So there's a lot of that really helps out. And that's where you really have to look at it, look at the market that you're going to go into, look into the industry as well. Because like we talked about, high risk, some of them, and then these are some low risk that are service based businesses, fast, easy, maybe not too much overhead and all that.
Man, awesome, awesome. Man, this was awesome. This is so much information we just crammed in here.
Yeah.
Hey, Hugo, tell everybody where they can find you, how they can get in touch with you. Give them everything that you got.
Yes. So you guys can find us on Instagram at HGO_capital, or you can also reach out to us at our business line, which is 888-894-4880. And then email as well. You guys can reach out at info@hgocapital.com. So those are some of the ways that we can easily be reached out to. And we will also be in the Downey area coming soon, so we can also share that information when it's available. But yeah, we're here to support virtually, in person. Um, we do on my end. I do a lot of the free credit analysis. So if you guys are coming from Trevor's group, come by. Reach out. We will give a free credit analysis, credit audit to you, help you establish your credit, and just help you overall with all your plans.
Awesome, awesome, awesome. Hey, man, I appreciate you stopping by with us today, giving us so much information. The key is not to just to hear the information, but to take it and do something with it.
Correct.
That's why Hugo's here to help. Man, I appreciate you stopping by.
All right, my pleasure, Trevor. Thanks,
All right.
guys.
All right, thanks, guys. Talk to you soon.